Hi everyone, Patricia Kiteke here. Today I want to talk about whether or not COVID has been affecting lending practices. We've been getting the question a lot, so I've asked my good friend McKay Wood, who is a mortgage broker extraordinaire, to join us and let us know what's happening in the great world of lending and mortgage funding during everything that's going on. So, McKay, I am really excited to talk to you about COVID and, well, not about COVID, but about mortgages.
Right.
And just how that's been affected.
Yeah, the after COVID dilemma with
The
mortgage.
after COVID dilemma, that where do we go from here? What do things even look like? Do banks have any money left? You know, all that kind of stuff. Yeah.
Well, the economy is tanking, we know that.
Right, sure.
And I think we should get into talking about it a little bit. But you know what? What I found over the past little while is banks are kind of hungry. They're not meeting their quotas. Business is way down. Banks typically earmark money, and probably a lot of money has been earmarked to be fulfilled. And guess what? Not as many people are buying or looking, or they're just scared, they're nervous. And so many banks, lenders, financial institutions, credit unions, they want the money. They want to give the money.
They want to lend. Isn't that interesting? There's 50% less, actually a third less inventory in the market. So also a lot of the slowdown from our end anyway has been supply side, not as, demand, maybe if we had more supply, but certainly the slowdown is more supply side driven, which is pretty unusual. I've never actually seen a slowdown due to such an extreme lack of inventory.
Mm-hmm. Do you find the motivation of your buyers that are currently really interested is different than when it was before?
I think people are still moving if they need to move. So relocations, and I'm not sure if it's because of where we are in the country as well. And you might have more insight into more larger, like across Canada kind of issues than I do. But for us, I'm finding the people that need to move still pretty legitimate reasons. Regular stuff, jobs, families, structures changing, all that kind of stuff, jobs changing, people relocating. We still get the military transfers and stuff like that too. So we're still seeing that, but again, the inventory is so low that it's if there is a kind of drop off in demand, we have so few homes that we're not feeling it on that side yet.
Interesting. And I guess parlaying into that, do you find that the people that are selling, or at least a good portion of them, are motivated sellers because they need to sell because of relocation and because of other things? Are you finding that?
Yes, the people that need to sell are definitely motivated, because anybody that doesn't need to sell is just like sitting tight. I don't see them like fire selling though, so I really want to separate motivation from like I'm not seeing a ton of foreclosures or anything like that. Like I think a lot of people thought we were going to see like a 30% dip in prices, and then all of a sudden everybody was going to get foreclosed on. I think the banks they have some pretty strong measures in place to help out people who can't make payments for at least the next short term while. So I don't know if beyond that we're going to see people that just can't afford their payments anymore, but for now I think the banks have actually done a pretty good job of bridging that, and they've made it very easy to access that pause in payments.
I was ready to pull out some money. If you said fire sale, like, okay, where do I put it?
I know, right? Where does it go?
I mean,
it's not there yet. Let's put it that way. I don't know what the next 6 months is going to look like, but we're definitely not there right now.
That's one of the big questions I get constantly from people I talk to is, what's going to happen? Do I go into a fixed or variable rate mortgage?
Right.
Tell me the next 6 months, Mr. Wood.
Yeah.
Such a big question mark in many ways.
Yeah, totally. So I know, McKay, you've helped our clients with a lot of different scenarios. Like you've helped them, on the private side, that's something that we've done quite a bit, with you over the past, I don't know, couple of quarters at least. And then you also do a great job of placing them in really good quality, A mortgages as well. What are you seeing? So you said banks want to lend. Like, what are you seeing out there in terms of
Yeah.
mortgages, good rates, good products?
Well, here, let me highlight. I wrote down a couple notes just, to keep it interesting and fun. But,
Nice, nice.
you know, uh, there's a couple products that popped out recently that were very fascinating. There is interest 3 for 3.
Okay.
Interest free for 3, pardon me. What that means is there's a lender that's come forward and said, you know what? We want people to come into our mortgage. It's this particular one, a high ratio mortgage maybe. Good rates, very competitive. They will cover or waive the interest you pay for 3 months. How about that? That's pretty appealing. In fact, here, let me just pull up a couple numbers. I did some math. For people that are listening, will find it fascinating. But this particular mortgage, let's say you buy a place for $500,000, okay, and you get a 2.54 rate, competitive. There might be slightly lower out there versus maybe a 2.39, but ultimately you pay a pinch higher in the rate, given your circumstances. The interest payments that you would save is about $1,052 per month.
Wow.
So that equates to $3,150. Just here you go. Thanks for being our buddies and coming to our lender. So that particular lender wants to get the money out the door, and they're willing to give incentive. So that's a cool initiative. I don't know if you've ever heard of that one before.
No, that's new.
Yeah, there's another, cashback programs where they're willing to give some cash back. They can tweak the rate a little bit. So instead of, the rate being slightly lower, they'll tweak it a little bit, slightly higher, but they'll give you some cash back in your hand, $2,000 or $3,000.
Okay.
Now,
This used to be popular like a few years ago, these cashback mortgages. Wasn't this like 8 years ago or something like that?
you know what? They've actually been there. They've been in there. They've never changed. There's still a few groups that have it in their offerings, but now they're kind of pulling it out and showing it to people. Like, oh, hey, look at what we're doing.
Remember this thing that we do?
Yeah,
Right.
and I think it does stem back to the challenges of the COVID environment and people maybe not having a cash flow like they used to, reduction in wages and even some lost wages. But that was a couple of cool programs, I thought.
Hmm.
Are you finding, just in your network, I'm really curious, are you finding people are losing jobs?
We have had a few people drop off, absolutely. And March-ish, I want to say like end of March, there was really this like separation of people that were able to continue moving forward and people that had to get on the fence and either had lost their jobs, been laid off. And as now can no longer provide like pay stubs or, what they need, even though some people we know are going to have jobs to go back to in some form coming soon, we hope.
Some kind of job.
Yeah. Like even just layoffs and things like that. So yes, there has been a portion of people that we had to just had to park it.
I mean,
Percentage-wise, I'm not sure, but yeah.
Yeah, I mean, you and I have done a bunch of different unique files, and you talked about the private lending.
Yeah.
This is an interesting opportunity currently. So, for some people who can't make mortgage payments, you can do the deferral program, right?
Yeah, right.
You deal with your lender and say, hey, I've got some challenges, please help me. And they will defer your mortgage. Ultimately, you have to pay it back. So
right.
It's still going to come out of your pocket.
Actually, I have a question about that, McKay. Does that get tacked on to the end of your term then, or the end of your amortization?
I think it's based on different lenders on how they structure it. So, they all want it back. And so the question is, how does it come back?
Yeah.
And so, I don't know the logistics of each lender and how they do it, but different lenders do different things.
Right.
You're still under the gun to give
eventually that's owing kind of thing.
Yeah.
Mhm.
And in the end, everything is tallied up. So if it never came, it would come in the end. I mean, the good thing about the deferral program is they don't penalize you on your credit bureau
Yeah,
for.
totally.
I
Totally.
mean, that's a super positive thing.
Oh,
But
yeah.
going back to private side,
Okay. Yeah.
there's some people that are really struggling, that have a lot of equity. This comes back.
Ah,
This comes back to that maybe the retirement demographic, the people that have winded down their jobs, very little income, but they got a huge amount of equity in their home.
mm-hmm.
There's a mortgage called the reverse mortgage,
Right.
and you may have heard that, but it takes the equity and it pays you from your equity, and it's you don't have to put out anything. It just literally takes from the equity and pays you to live. Your
Mm-hmm.
equity slowly goes down, but that's just how the system works.
Right.
With other people who have lost their jobs, and maybe they're not in that same demographic, they're still young and ambitious and good looking, whatever they are, they could potentially tap into a private mortgage temporarily until their situation changed. So
Mm-hmm.
they could, let's say they have a mortgage, you know, $500,000 mortgage, or less.
Mm-hmm.
Let's say $500,000 mortgage is $1 million property. I mean, we're dealing with bigger numbers.
Sure.
Actually, let's deal with smaller numbers. $250 mortgage, $500,000 property, and they lost their job. They, may have not been the best savings in their time. They're just in a
Sure.
weird spot.
Sure. Yeah. Well, and a lot of
With,
people look at their home as that savings
yeah,
portion. Mm-hmm.
yeah, which it is.
Yeah.
So for those kind of people, you can actually tack on a second mortgage. Let's say you need,
Mm.
if I had $30,000, that would get me to the next place. I know where that place is. My work is queuing it up, but it might not be for 4 or 5 months. And quite frankly, I've used all my deferral component.
Mm.
We're
Right.
swamped. So it is a fix. It does cost a little bit to get into that, but it can be a very stress-free solution for those kind of people.
That's very interesting. I never really thought to use the private mortgage that way.
Mm.
That's yeah, food for thought for sure.
Yeah, and it literally would just you would process it, and it would be money in the bank suddenly. Oh, there's an extra $30,000 sitting there. Budget still, be smart.
Yeah, sure.
Rice and beans,
Don't spend it all in one place, right?
right? But it
Yeah.
gives them the flexibility when you have a lot of equity. So
Mm-hmm.
something to
Mm-hmm.
consider.
That's really great to know. Thank you for that.
Um,
Okay.
yeah.
So McKay, you're saying that lending, are we seeing longer timelines? Like is it taking longer for approvals? I know you kind of tee us up when we're writing contracts and you give us an idea of, how much time you're going to need, because we're always putting you under the gun and being like, hey, can you get this done in 4 days? Because, you don't have a life. You can just do mortgages night and day. But, are the time frames longer now that we're seeing?
When COVID initially hit, let's back up, I guess a month.
Sure. Yeah.
What is it, a month and a half now?
I feel like, yeah, 6 weeks, 7 weeks.
I'm just in my house trying to
Just a
figure out
blur.
where I am still.
Yeah.
So, when that initially hit, a lot of these lenders, decided that they were going to obey the laws of the land and try to protect people, and so they started transitioning to home. And some of them did have that
Oh,
in place.
like
And
work
so
from home, you mean?
work from home,
Got it.
for example, typically when we would send a file into a lender, the underwriters and underwriter manager, they would be there, they'd be able to see the file, everyone's together, they could troubleshoot
Mm,
if there's some concerns. Not quite like that as much now.
mhm.
I find a lot of these underwriters and processing, they're from home. And so
Right.
I don't want to read between the lines there, but I have a feeling that they scrutinize things a pinch more because there's nobody looking over their shoulder right there. They're looking over in a different place. And so processing times had been delayed significantly as they made that transition. It was really tough. You remember those days. There was
Yeah. Yeah.
a few files that were just pulling our hairs out, and we're like, what?
Yeah.
When? So
Yeah. I remember being asked for an extension or two, and it was like, okay, everybody breathe. We got this. Like you could not do extensions, even what, 8 months ago, right?
right.
So yeah.
There was backup people waiting,
Yeah.
and offering more.
Yeah.
So processing times has changed a little bit. I find it maybe slightly slower overall.
Okay.
Maybe just the way it's processed. I think maybe some people have been let go on some levels, so I don't know the staffing requirements and levels. There's a few lenders out there that drastically reduced, and even a couple that haven't really come up. So it just depends. We get really smart on where we go
Right.
and the timelines we have in place, and then we weigh out rates and the mortgage itself. But that's a great question. I don't even know. We're rolling into summer here soon.
Yeah. Right.
And everything's going to slowly open. I wonder what's going to happen to processing times.
That's interesting. I think you bring up a really good point, and this is something I talk to when I'm talking to people about, the difference between someone like yourself who's a broker who basically has access to, hundreds of institutions in the country, some that we probably don't even know about that you are able to access. Obviously, a lot that I didn't know about. You kind of opened up the whole world of private lending for us, really majorly to help a lot of clients last year. But so you're able to know, how different lenders work, where their strengths and weaknesses are, and how that's going to help the client, which I've always been really impressed at your ability to talk to someone, understand their life, understand, what they are forecasting for the next year to 5 years of where they want to be financially, and then helping them understand the product that is going to get them there, because it's not all about 5-year fixed rates. You know what I mean? It's, those posted rates just aren't everything. And we talk about this, especially with clients who are in the military that may have to leave at the drop of a hat, or people whose situations are changing. You have to look past some of that stuff. And I think when you were talking about knowing the lenders, it just reminded me of how well you do know the landscape of lending.
Yeah, no, thanks for that. I find it interesting, but a lot of the people we don't actually meet with. And of course, in our current situation, we can't really. Every now and then we'll get on a Zoom or a Skype or something like that. But the trust that these people put in us is huge.
Yeah.
We look at these pieces of papers and these conversations, and it really lays out these individuals. We know them really well. Sometimes we don't know exactly what they look like until we see the ID. So it's a very weird dynamic.
Yeah.
And yeah, I mean, further to what you said, a mortgage broker has access to lots and lots of different lenders, and that is their strength. Yes, it's rates. It's going for the best rate at the best time. It's going for the extended ratios that you need, because something's not going to work anywhere else but there. And then, location is another component. So yeah, I mean, learning all the time. You know how it is.
Yeah.
It's funny, when I became a mortgage broker, I mean, I'm still many years in, but I'm like, do I really know anything? It's a learning process.
Right.
New solutions, new puzzles.
Mm-hmm.
And I think that's what keeps it exciting. If you can get your head around the timelines and the stress.
Right. Yeah.
Then you're marvelous. Yeah.
Yeah.
Anyway.
Then it's all good. Yeah. No losing anyone their dream home, and you're good, right?
I know, Patricia, you're a very strong mentor. You've mentored me a lot in different ways, business. Just your disposition, super happy, positive, which is a big part of your success, I think. How have you found that impacting your business? I know you work with some really strong realtors on your team.
Yeah.
How has that really benefited during these times as well?
Well, a lot of it has been keeping a clear head, keeping a clear focus. And I think there was a lot of panic, and you're right, even in the beginning when clients were sort of people who we thought were really in strong positions and strong numbers leading into the spring market. I think everybody expected a far stronger market this spring in 2020, and then all of a sudden we got hit with this giant global issue. So I think staying clear-minded, staying focused, and remembering to keep the things that are within our control at the forefront of what we do every day was probably the biggest thing. And just remembering to, like I think there was this energy at first of like, okay, there's COVID, so we're gonna be off until further notice. I think there was a lot of that out there. And then it was like, no, we're not off. We're actually going to work harder, because that's going to determine the next, what coming out of this is going to look like for everybody. So we immediately made it our mission to reach out to our entire database and just check in with everybody and see how they were doing. And then from that, we were getting feedback from clients. Everybody was in different stages with their work, with how shocked they were, with how they were impacted, and family members and things like that. But yeah, we just made it our mission to be a steady ship, and actually double efforts in some areas, as opposed to calling it in.
I think in speaking with you and myself and some of your agents as well, and some of my agents, it was turning out to be the best year yet at the beginning.
Totally. February was awesome. Yeah.
So, yeah, it really has been an adjustment. And, if we work as hard as we normally do, like that's to everyone who's, listening or whatever,
Yeah.
we can build the momentum and even a pipeline scenario.
Yeah.
And when the lights come on,
Yeah.
we're crushing through everything in the end. So
Totally. I think too, the interesting thing for us was like, we had already spent 2 years with our company moving to a lot of virtual real estate tools. And so we didn't have a hiccup as well. Like, we were able to keep operating the way we were operating. We did, obviously we miss each other, and it would be nice to, have a Friday meeting where we can all like hang out and, just there's a bit of that dynamic that's lost, although we're finding it more and more through Zoom. And we meet in Zoom often, and we work in Zoom together. So even if you're muted or you have to, but the accountability is there, and you can see everybody's face, and everybody's working right along with you. So I think having some camaraderie as best you can is important too. Yeah, just having the right people around you is awesome.
yeah, you're a very FaceTime individual with, and as a realtor, you have to be on. I have to say I'm a little spoiled because, I can look all greasy and grumbly back here, and nobody knows. I just need to sound good. No, but the reality is, in our system, we have done very little different than we were already doing.
Right. Yeah.
It's kind of nice that there wasn't necessarily, the only hiccup was, a bit of a downtick.
Yeah, sure.
But everything else was the same. So it'll be interesting to see how it pans out this in the next while.
Yeah, totally. Well, McKay, you always look good every time we see you, so I don't know what you're talking about.
It's good from the waist up these days, right?
Yeah, totally. That's awesome. That's amazing. Well, I'm going to actually post a couple of additional notes on what you mentioned here. Is there anything else that you want us to know just before we kind of wrap, like mortgage wise? You actually pointed out some great rates. You were talking about 2.54, like, oh yeah, that's no big deal. But I think remembering how cheap money is right now still is just like a good reminder.
Yeah, I mean, the times of sub 2%, we can see them. 2.20 is there, and it's ready for people who have less than 20% down. Let's go get it. It's a variable, but yeah, I'm curious to see how the economy goes and how the disposition of lenders. I've read some articles lately that says we should be sub 2%, even on the fixed side, but lenders are a little bit hesitant,
Right.
managing their profitability. Right. They all make lots of money. We know that. So it'll be interesting to see how that process is in a little while.
Thank you so much for watching. Wow, some really good information about what's going on with lending practices from McKay. Thanks so much to McKay for joining us. Please get in touch if you have any questions. If you have questions about specific lending products, let us know. We're always happy to help and answer anything that we can. Reach out if you're wondering what's going on and how this can affect you directly. Have a great day.